morning, investors. Welcome to Set Digital Roadshow for the Q1 performance of PTT Exploration and Production Public Company Limited or PTTEP. First of all, I would like to introduce our management and investor relations team who will be taking you through the presentation and also Q&A. First, Mr. Sermsak Satchawanakul, our Senior Vice President for Finance Division.
สวัสดีครับ Good morning.
Second, Mr. Siranat Sorunthanagar, Senior Officer Investor Relations.
สวัสดีครับ Good morning.
And myself, Natapon Deshawarapon, Manager Investor Relations. Today's agenda we will go through first on the company and strategy overview, followed by a business update and then financials and leaving Q&A at the end. So please feel free to leave your question if you have any question. Without further ado, please Mr. Sermsak to continue.
ครับ Okay, we start with the overview of our company profile. Based on the first quarter this year, we have the $12 billion in market capitalization, and last year we have a dividend yield to shareholder about 8%. We still focus on strategic on being a national oil company to ensure the energy security to the Thailand, and we committed to maintain and sustain national energy security, and we can be part of the supply in the Gulf of Thailand of gas production up to 82% on that portion. But however, the country still have the gap on the energy demand. So that gap, part of it will be placed by the imported LNG. Okay, so for PTTEP, our sales we still growing international and focus on value creation on the overseas investment. Our strategic footholds in strategic countries as well, being Malaysia, Myanmar, Middle East, and Africa. Okay, looking back a decade ago, we can achieve production and sale volume growth about 52%. So about last year, we can have the sale volume is about 490,000 barrel of oil equivalent, and that part contain gas portion about 70%, and the rest is the 30% liquid. So this year sale volume target will be around 505 to 510,000 barrel of oil equivalent a day. So that our target. So did the unit cost be can lower the cost 32% comparing the 10 years ago. So our recent unit cost is about 29.5 barrel, $29.5 per barrel. So we keep to maintain the same level of this unit cost in this year as well. So we still operated based on the sustainability frameworks and the sustainable development. So that part of the overview of our profile. Next, on the latest update on the energy strategy for the complex world. So this is a summarized from the Solar Week in Middle East. So is that we have 5 touch point to update you all. First on the energy security and national gas. So we see during this energy transition that the gas will be our destination fuel, and we are gas company, so we will produce more cleaner gas. And the second point on the focus that shifting during the energy industry. So to balance climate commitment and energy security is very challenging, and we have to optimize, how to operate in this balancing during the transition. And the third point on the AI and energy demand, we need to have the power sufficient to support the accelerate of the AI demand and efficiency. This is the new new normal already. Okay, and for the recent geopolitical landscape that have the energy dynamic world, and also the challenging U.S. tariff and the trade war that reshaping many country to rethink about the strategy, how to rely on and support the energy in their home country. And the last one is the trend of the next gen clean energy for the future energy investment that very challenging and quite dynamic. PTTEP, still focus on 3 strategy on drive value, decarbonize, and diversify. So in short, we focus on drive value on to maximize gas supply from our gas 3 corridors in Thailand, and also to maintain the cost competitive in Gulf of Thailand, and also seek international growth in the strategic country. And for decarbonize and diversify, so we committed to implement the greenhouse gas reduction by 2050 with initial state that focusing on the carbon capture management, even as the pilot or sandbox project in Gulf of Thailand, says ARTIC project, and to further extend CCS as a service in the hub in the northern part of Gulf of Thailand. So this will be orchestrated by PTT, and we will progressing on to pursue CCS hub in Thailand as well. So these the 3 strategy remain the same. Okay, next cap. This year it will be 4 decades for PTTEP since established in 1985. We already operated 40 years in Thailand, and 36 years in Myanmar, 32 years in Malaysia, 22 years in Middle East, and 21 years in Algeria. So this proves the experience and know-how, especially in the gas production, and be prudent operator, since we enter in many countries from the JV partner to the low-cost operator in many countries, such as in Myanmar, we have Sotika and Yadana, and Malaysia, in Sarawak and Sabah, and also in Middle East and Algeria, accordingly. So we have current production close to 700,000 barrel a day last year. Next cut. So looking ahead to the next decade of PTTEP, we still ensure the energy security and expand to international for long-term sustainability. So still remain on the energy security in three gas corridors as main gas provider in Eastern Gas in Gulf of Thailand, Western Gas in Myanmar, and Southern Gas in Malaysia. For international, yes, as I already mentioned, we going to be grow as the joint venture partner through a strategic partnership and with the strong relationship with our partner. So we aim, to have the production growth over next decade about 2-3% in average. So the volume mix still will be more gas. So we focus in 4 areas. The first one is to achievement for production growth. So even we have in our portfolio in Gulf of Thailand and Malaysia with the marginal gas fuel. So we will prolong the plateau from the asset by put more drilling and development to make sure that we can maintain the production in these 3 corridors. And the second, very important, that we have to maintain the competitive unit cost through many initiatives and many synergy. For example, in Gulf of Thailand, we will synergize our 3 assets to operate in Gulf of Thailand at one single unit. And this challenging will also extend to Malaysia as the synergize and driving cost competitiveness. And the third one on the safety, health, and environment culture. So we maintain and promote the safety as a priority. Safety is the common sense that embedded this culture through our employee, our contractors, subcontractors, where we operated and as operators. And the last one, we will enable the workforce for the future development. So to reskill the employees to enhance their capability, and also integrated the digital technology using the big data and the AI, to improve work efficiency. Because in the next decades, we have to grow both, domestic and international. So the workforce for the future, will shape this growth smoothly. So this all from the latest update on our strategy.
Okay, for the next one, we will move to the business updates. So I will start with the major project development. Next slide, please. Okay, for the major project development, we still focus on the E&P business in the focus area. For example, Thailand, Southeast Asia, Middle East, and Africa. For the major project development, I would like to start with Thailand. We have various project development in this region in the first quarter of this year. The first one is the additional stake in the Simple Home project, in which we have increased our participating interest at around 80% to 90%, which we enter into the sale and purchase agreement, and is completed since the 16th of April this year. And after the completion, this will help adding the sale volume to our company for around 5 to 6 kboed. And for the next one is Archit GSA amendment. This is according to the improvement of the capacity of the Archit field itself. So we have amended the gas sales agreement to increase the daily contract quantity from around 280 mmscfd to 330 mmscfd, which would effective from June this year onwards. And the last one in Thailand, they are the Artist CCS, which is the pilot project in Thailand for the carbon capture and storage project. So the engineering design for this project have been completed, and we are preparing of the relevant document and the agreement to go forward to the final investment decision to start the development within this year. And after the FID, it will take around 3 years before the first injection of the carbon dioxide. So in full capacity, when the project have complete development, in full capacity the storage capacity would be around 0.7 to 1 million ton of carbon dioxide per year. And the next one is the Southeast Asia. We have the development in the Malaysia. The first one is the Malaysia Greenfield, which is the block in the Sarawak area in the Malaysia, which consists of block SK405B, SK417, SK438, and SK410B in the Paprika field. This is the will be developed as at a cluster development to using the facility together to increase the efficiency in terms of the project cost. And the final investment decision to start the development of this project is expected to occur within this year as next year, with the expected first production in 2028. And the next one is the Lang Laba, which is the last discovery field in Malaysia. This project is under the reconcept of the engineering design to enhance the efficiency in terms of the project cost as well. And the reconception is expected to complete within this year. And the next region is the Middle East. They are the Kasha concessions we just acquired last year. The deal is complete last year with the around 10% stake in the project. This project is under the development phase, and is expected to have the first production within this year, partially production within this year, and full capacity will start in 2028 when another field become producing. And the next one is the Abu Dhabi offshore to Al Wased. This project is under exploration phase, and its final development plan have been approved by the government last year, and this project is going to have the final investment decision to start development within this year as well. And the expected first production will be in around 2027. The next one is Africa. We have acquired a Tuat project, which is a gas project in Algeria. We have entered into the sale and purchase agreement in December last year, but the deal is still subject to the completion, and the completion is expected to occur around second quarter this year. And this project is already in the producing phase. So after the completion in the second quarter, it will help adding the return and the reserve to our company immediately. And the last one is the Mozambique Area 1, which is the LNG project in Mozambique. This project construction has been suspended due to the unrest in the area since 2020, but the situation is quite getting better now, and the operator is considering to reassess the site to continue the construction. And the first cargo of this project is still in the window of the Q4 2028 to first half of 2029. And the most recent update for this project is in terms of the financing, our lender have approved the project loan to this project as well. And for the next slide, this would be the overall portfolio of E&P business of our company. As I mentioned, we are focusing in 4 areas. The first one is Thailand. It contribute around 68% of the total sale volume of the company with the producing assets. For example, the G161, G261, Artist Contract 4, and Sinpuhom, which we have planned to maximize and prolong the gas supply from this project. And for the potential growth in this area is the exploration block, which are the G165 and G365, as we have planned to expedite the exploration activity for both projects as well. And the next area is the Southeast Asia, which contribute around 21% of the total sale volume of the company, with the producing asset in Myanmar and Malaysia. For example, Sodiga and Yelena in Myanmar, and the Malaysia Block H, Block K, SK 309311, which we are also have the plan to keep investing in this project to maintain the production volume. And the potential growth is the Malaysia Greenfield and the Lang Laba, as I mentioned earlier in the previous slide, which is under the exploration phase and will have the final investment decision soon. The next area is the Middle East, which contribute around 10% of total sale volume of the company, with the producing assets in Oman. For example, Oman Block 61 and Oman Block 6, which we also have planned to continue in investment to maintain its production as well. And for the project growth in this area is the Gacha concession and Abu Dhabi offshore too, as I mentioned earlier in the previous slide. And for the last one is the Africa, which contribute around 1% of total sale volume, with the producing asset in Algeria, which are the Algeria 433A, 416B, and Algeria Hassi gas, in which we still have planned to investing in the project to maintain and increase its capacity as much as possible. And for the potential growth in this area is the Algeria Tuat project, as I mentioned earlier, that's still subject to the completion of the deal, and the Mozambique Area 1, which is also mentioned in the previous slide. So this is the overall portfolio of E&P business of our company. For the next one will be the presenting of the financial result by Khun Natapon. Thank you.
Thank you, Khun Siranat. So for the financial part, on Q1, our bottom line reported at $488 million. Majorities will be from the profit from normal operations of 490. The minority part is -2 non-operating items, mainly from the FX loss. The net profit 488 was lower around 9% from Q1Q, mainly due to the normal operation part. Our sales volume lower by 3%, unit cost higher by 5%, while the average selling price remain flat. If we compare YOY, the net income was lower around 7%, despite the sales volume higher by 2%. However, the sales price have been lower by 3%. However, the unit cost also increased by 6%. Let me go to the next slide to more into detail for each of the factors. For the sales volume in Q1 2025 was stay at 484,000 barrel of oil equivalent per day. Majority come from Thailand. This is lower 3% Q on Q, mainly in the Gulf Thailand from G261 project or Bongkot that have the annual planned maintenance shutdown in Q1 this year. Also on the Middle East and Africa that have the lower crude load as a cyclical lower shipment. And year on year, the sales volume was higher 2% mainly from the ramping up of the G1 production in Q1 last year. That the production was ramping up from 400 million standard cubic feet per day to 800 million standard cubic feet per day from 20 of March 2024. So it's what accounted the 800 million scarf per day only 10 days in Q1 24, while it was full quarter in this quarter Q1 25. For the sales volume, for the sales price, the weighted average selling price for this quarter would remain flat from the previous quarter at 45.74. If we compare year on year, the selling price was lower around 3%, while the Dubai was lower 5%. So the lower magnitude of the lower weighted average selling price was due to our gas, which is a small resilient of the price. The volume mix for Q1, 73% in the gas and 20% in liquid. On the next slide, you have the more details on the unit cost. Our unit cost in Q1 was $30.77 per barrel of oil equivalent, higher 5% Q on Q, mainly due to the D&A from G1 and G2, which is higher for more complete asset, and also offsetting with the lower OPEX due to lower maintenance activity in G161 that have the high maintenance in Q4 last year. If we compare year on year, the unit cost was higher 6% from higher DD&A from G1 and G261 from more complete asset, and also higher OPEX due to the higher G261 higher maintenance if we compare year on year. I would like to also highlight about the cash cost that we have. Half of the unit cost, around 15.6, was a DD&A. So after offsetting with the DD&A, our cash cost was $15.21 per BOE. Now, if we compare the average selling price on the last slide, 45.74, with the cash cost around 15.21, meaning that we have the cash margin of around $30.5 per BOE, meaning every barrel that we sold during the quarter, we can generate additional cash of around $30.5. That leads to the cash flow on the next slide. Our EBITDA margin was 72%. The ending cash from last year around $3.9 billion, and we have the cash flow from operation around $1.3 billion. That's represented $30.5 per barrel that we produced during the quarter, which is this $1.3 billion, which is more than enough to cover the tax paid, investing activity, and also the debt services. And during the quarter, we have the additional cash around $200 million. Ending cash at the end of Q1, we have cash $4.1 billion. And after we include the short-term investment around $370 million, we will have the ending cash and short-term investment of around $4.5 billion, which is remains very solid. Our financial position side, on the total asset, we have increasing total asset mainly from increasing of the cash and also the PPE due to investment during the period. For other liabilities, it has been increased by around 630, mainly due to the dividend payable that we booked around $600 million at the end of Q1 after the dividend for the second half of 2024 of 5.125 baht per share was approved by the AGM on the 31st of March 2025. The interest-bearing debt was increased around 120 million US dollar, mainly due to the lease liability. The equity lower by 120 due to the effect of the NI 488 offset with the dividend that we declare around 600. So that's the balance sheet. On the debt profile, our debt to equity and debt to EBITDA remains at very low level. DE at 0.25 and debt to EBITDA at 0.6, well below our internal policy of 0.5 time for DE and 1 time for debt to EBITDA. Our average cost of debt is 1.39% per annum, 100% fixed in interest rate. For the financial outlook for the Q2 and the full year 2025, in Q2 2025, our sales volume we target at around 500 to 505,000 barrels of oil equivalent per day, higher Q1Q due to lower planned shutdown activity and also additional stake of the Sinpuhom that we acquired effective from 16th of April, and also the cyclical crude load that we target to have a higher crude load in this quarter comparing to Q1. On the full year basis, we target the sales volume at around 505 to 510,000 barrels of oil equivalent per day, higher from the full year 2024. First from the G1 full year, the ramping up of the production to 800 million scf per day on the full year basis in this year, and also the additional stake of the Sinpuhom that we acquired on April. For the gas price, it will slightly lower in Q2 and also the full year at around $5.8 per MMBTU. The unit cost we target to maintain at the current level around $30 per BOE. The profitability EBITDA margin we target to maintain at the same level around 70 to 75%. That's conclude our presentation for the 3 parts. ขอบคุณครับ